Welcome back. You're still with us on markets today. Well, the fourth headline today, ICICI Bank was buzzing in trade after reporting a strong set of numbers in the fourth quarter. Net interest margins hitting an all-time high of 4.9%. The bank's net profit jumped nearly 30% year-on-year. Abhishek is back with us with the fine print.
Well, Sandeep Bakshi has created history for ICICI Bank in Q4 FY23. So records continue to gather as a net interest margin of 4.9% is the highest that they have ever seen. The domestic net interest margin has crossed the 5% level, and the international net interest margin is also at 26 quarter high of more than 1%. So the NII growth is perhaps one of the best that you are seeing in last 8 to 10 years, given the fact that it's a growth of 40.2% YOY, which has aided the PAT or the earnings or the bottom line of the bank being the highest ever in terms of quarterly performance. So highest ever quarterly return ratios as well. The return on asset is at 2.39% and the return on equity is at 18.9%. Asset quality continues to improve. The gross NPA ratio has come down to 2.81% and net NPA ratio at about 0.48%. So the asset quality is one of the best that you are seeing in last 33 quarters or even more. Unsecured book is the highest in last 22 quarters. The proportion of that unsecured book in the overall loan mix is now at 19.4%, which continues to aid in net interest margin being on the higher side. On the flip side, the deposit growth, that's a bit worrisome. It's come in a little less than 11%, and going ahead, management has indicated that the net interest margin may not be sustainable at current levels, but 5% net interest margin on domestic business, even a small decline will go well with investors. P&L, both in terms of NII and PAT, it's a beat on our poll. Brokerages remain upbeat on the stock. They say that the ROE will increase to about 17 to 18% for the full year by FY25. So they raised their estimate by 3 to 9%, and they say that uptick in deposit mobilization will be a plus point given the fact that FY24 loan growth will be strong. Across brokerages, the target price ranges from as low as 1100 to as high as 1200 per share. Back to you.
Okay, all right, Abhishek, thanks very much for that. Staying with banks, IndusInd has reported a mixed set. However, it's been a strong quarter on the asset quality front, with both gross as well as net NPAs on a downward trend. The stock ended lower today by around 1%. Abhishek still with us to give us more.
Well, operationally, a weak quarter coming in for IndusInd Bank, given the fact that if you take a look in absolute value, one of the rare instances that you are seeing in this quarter of a bank reporting increase in gross NPA and net NPA. So absolute value, gross NPA is up 2% and net NPA is also up 2%, which is a weak, considering the fact that on an industry level, the gross NPA and net NPA are improving. We need to wait for the movement of gross NPA details. As per Philip Capital, they were estimating 1400 crore of slippages for Q4. So how that might have played out in this quarter needs to be seen. And if at all it is higher than that, then that will be taken negatively. Operationally, the NII growth is on the weaker side. As per our poll, we were working with a number of 4,716 crore. It has come in a little under 4,670 crores, which is a miss of nearly 1%. So even their operating profit growth is below their overall loan growth, coming in at 12.9% YOY and just 1.9% quarter-on-quarter. So lower provisions have aided the PAT this time around. Provisions have declined by 29.6% YOY and about 3.3% on a sequential basis. So they have reported a PAT of 2,043 crore, which is up above our estimate of 2,012 crore. So business momentum has remained pretty strong for them. They had reported this business number of deposit and advances earlier as well. Cost to income ratio, that's seen a sharp spike as well, 44.9% when compared to 43.5% in the same quarter last year and 43.9% in the previous quarter. So overall, operationally, a weak quarter for IndusInd Bank. Back to you.
Okay, all right. Well, we are not yet done with banks, and Abhishek, thanks very much for getting us that perspective on IndusInd. But Yes Bank ended lower by around 3% on what was a weak quarter. The quarter was marked by a worsening asset quality, poor return ratios, and a loss in market share for the bank. However, the net interest margin was the best that they've seen in 9 quarters. Here's Prashant Kumar, the MD and CEO, on the outlook.
In the FY24, the slippages would be somewhere between 1 to 1.5%. Retail is growing much faster than the corporate. So even the last year growth has been 38%. I think this trajectory would continue for some time, and retail would be somewhere around 50% of our balance sheet. Regarding the NIMs, I think we are still in that trajectory where for us this is not peaking out. This would be a continuous upward journey for us.
All right, well, on to the fifth headline today then. Sun Pharma has temporarily halted production at its Mohali facility. So it's definitely a negative which has come through for Sun Pharma, because remember that now the Mohali facility, what analysts are pegging this at is that it could possibly be, similarly compared to an import alert. So I'll come to that in just a bit. But they have basically received a letter which is titled Consent Decree Correspondence. Remember, they were the Mohali facility, which was inherited from the Ranbaxy merger, was basically a part of a consent decree which was entered into in 2013, 2014 or thereabout. Now, the US FDA has inspected the company's Mohali facility from August 3rd to August 12th last year. They had issued 6 observations. It had resulted in an official action indicated status, which means that the possibility of an adverse action increases if you have the OAI status. Now, the company has said that they have taken certain corrective actions before releasing the final product batches into the US. Actions include retaining an independent expert to conduct batch certifications. The company says there is a temporary pause in terms of the release of batches from Mohali. Now, in terms of the impact, a brokerage such as Incred says they expect a low mid-single-digit impact on the numbers for a 3 to 6 month time period. But the overall negative also is that this is the second plant which is under the US FDA scanner. And remember that the company's Halol facility already has an import alert. So that's what's probably something which is worrying the street. But the stock recovered with a cut of only 1% by the close of trade. But let's move on. Ami Organics was buzzing in trade after it announced its foray into the semiconductor industry with its latest acquisition. The company has acquired majority stake in specialty chemical maker Baba Fine Chemicals. Sonal is here with the details on this.
Every chemical company has a different fundamental and factors affecting individual performance as well. But if I talk about the overall chemical industry, it is largely expected to have an improvement on a quarter-on-quarter basis. This is due to pickup that we'll see in exports. But there could be a muted performance YOY in some cases due to a weak global demand environment. Now let's talk about raw material costs. Basic chemicals, they have seen a decline in pricing, and that is because crude prices fell 8% on a sequential basis. Feedstock for oleochemicals, that was down 20% on a sequential basis. And ocean freight rates, they are down anywhere between 40 to 50%. So this will, of course, aid margins quarter on quarter. But demand pressure will continue in discretionary sectors like dyes and pigments, polymers, something companies that they have been telling us. Now, the fluorochemical space particularly. Sustained high price in refrigerant gases will aid earnings. However, there will be weakness in packaging and technical textiles business. This is just for SRF, and that's why revenue will be flat. EBITDA and profits for the company will be down this time. However, for Navin Fluorine, earnings will be aided by high-performance products and specialty chemical segment, leading to a 56% revenue, 98% EBITDA, and 52% growth in profit after tax. For Aarti Industries, which recently saw demerger of the pharma business, we will not be able to compare numbers YOY due to the demerger. But incremental revenue will come in only from new capex after FY24. And that's why revenue is flat in Q4. EBITDA is up, but the profits are expected to be down by 2%. For oleochemicals player, Galaxy Surfactants, it will be a steady performance after some weakness that we saw in last couple of quarters. Volumes are expected to grow 6%. Performance surfactants will be up 10%, but specialty, which is the higher margin business, will see flat performance. For Jubilant and Grevia, operational metrics will be weak, down anywhere between 11 to 15%. This is, of course, in a high base. Acetic acid, which is the raw material, has seen a 40% decline in pricing, which will lead to lower revenues for the company as well. Generally, active ingredients have seen a decline, and that's why performance will be weak. Now, taking you through the stock moves this year and valuations, barring few, these stocks have underperformed. SRF, Navin Fluorine, they are up anywhere between 8 to 16%. However, valuations for Navin Fluorine are at an industry high at 45 times. Galaxy Surfactants is up with valuations at 23 times. Aarti Industries is also on the lower side. It's around down 10%, but valuations at 33 times. As far as the new listings are concerned, Tattvachintan, Clean Science, Chemplast, all of them are down anywhere between 7 to 23%, with valuations very low for Chemplast at 13.5 times and for Clean Science 40 times after listing at around 80 times. So big fall is what we've seen there.
Okay, all right, Sona, thanks very much for that. IT major Wipro has announced that it will consider a share buyback proposal later this week, along with the release of its March quarter earnings report card. Reema's here with the details.
Thanks so much for that. So Wipro has said that when the company, the board meets for considering the numbers on the 27th of April, they will also consider a buyback. Now, this will be Wipro's 5th buyback in the last 7 years. Last year, the company did not do a buyback because they were focusing a little more on their M&A acquisitions. Now, JP Morgan estimates the buyback size could be $1.2 to $1.5 billion. Morgan Stanley says, based on the past buybacks, the range of the buyback could be from 6,500 going up to 10,500 crores. The cash on the books is ample at $2.7 billion. The past 3 buybacks by Wipro have been tender buybacks. So that's what the street is anticipating, because in a tender buyback, the promoter can also participate. The good part about a buyback right now, at least, is that it can lend some support to the price in case of stock volatility or uncertainty or weakness, given the current environment. Back to you.
Okay, all right, Reema. Thanks very much for that. With that is the wrap on this edition of Markets Today. Thanks very much for watching.